So I think this afternoon, if you're holding Microsoft, you obviously continue to hold. I think it's good. Things can get choppy, at how the market reacts after earnings. But I do agree with the sentiment that this is still a bullish area, especially for this stock, because of a couple things. We're already off. You mentioned 15% over the past month or what it's been, but there's still a lot of these secular trends that are super strong, especially particular to Microsoft. You're looking at that transition to cloud. That business being the biggest segment of their overall business is a strong point, and you're seeing more companies gravitate towards that, and their enterprise business growing strong as far as billings. And I think you also want to look at the proposed acquisition that they have for Activision Blizzard, what that means for the company going forward. It's a strong bet that they're making into that VR, AR space, becoming the third largest publisher now of video game software. And so I think that's another area investors have to look at. We're still holding, and we believe it's still a strong play here, Kelly.
All right. So in other words, if it sells off for whatever reason this afternoon, even if the whole market is, thrown into another fit, you'd definitely be a buyer here?
So yes, we like it. I think if they're still selling this afternoon after earnings, this is a great opportunity. If you were buying or dollar cost averaging at the highs, you should continue to buy as we're re-rating in this environment. Now, there may be choppiness. You may see some pullback corrections even after you purchase. But if you're looking at a long-term perspective, especially for younger investors, this is a great opportunity. I still believe in that.
All right, let's move along. Microsoft has been in the middle of the selling pressure this month. The NASDAQ, the worst performer again today. Whether it's big tech, new tech, low PEs, high multiples, everything seems to be getting walloped. Michael Santoli, what do you make of it?
Well, Kelly, over the last year or so, it's been this huge upside overshoot in a lot of the story-driven tech areas, then broken momentum, valuation compression, and now I would say in the last several weeks, some kind of real concentrated liquidation in so many of these names. And it really is a separation between various areas thematically within tech. If you take a look at semiconductors, they're still riding a pretty sturdy multi-year cycle. There's real demand. You can point to a lot of what their markets are today. It's not about hypothesizing their addressable markets tomorrow, whereas you have things like fintech, cloud software, cybersecurity, all of them, everyone agrees, are burgeoning areas. And because they're burgeoning areas, everyone thinks that there should be lots of IPOs and thematic ETFs related to them, and that often means supply over demand. That's where we are, I think, at this point. Maybe that stuff's working its way through. Also, within mega cap, look at how Microsoft and Alphabet have performed relative to Amazon and Facebook. Clearly, the market is making distinctions here. What's the common thread between Microsoft and Alphabet? I don't know. Monopoly-like economics, massive scale where you can kind of just sort of harness a lot of these big trends into cash flow as opposed to, other areas where there's logistical issues or regulatory ones.
On that note, Michael, thank you. Then on that note, Delana, would you be a buyer here of big tech or new tech, so to speak?
Ooh, good question. I think, one, we like both areas and we would take smaller bets in the new tech. But I think if you've been in a lot of the only growth stories that have sold off, you have to take that volatility as it comes because that's a trade-off you make when you're looking at these longer bets. We still like and always will like the big tech. And I think, as Mike was mentioning, Amazon, a stock that's underperformed, that obviously focus on longer-term gains for shareholders rather than short-term profits. You kind of have to take a stronger look at the business right now because it's still in a fascinating area being down so much. The core business of e-commerce is still strong and growing as the strongest market leader in that area. The reliance on cloud, they're still one of the biggest players in cloud. And a lot of these companies, people focus a little bit on some of the different macro narratives, but we forget that obviously these big tech companies have cash flow that they can use for inorganic growth as well. Yeah. And Amazon is certainly in that area and a possibility for that to be done, as you saw Microsoft is trying to do that as well. So I think, you just want to stick to these big cap, mega cap stocks here, Kelly.
All right. Amazon trading on the nose at 2,800 today, and that's your pick.